You ever just stopped and wondered why so many traders, smart people who put in the hours, just can't seem to get ahead? Well, it almost always boils down to these hidden leaks in their whole process. Think of them like tiny cracks in a boat, slowly letting water in, draining your account, and maybe worse, your confidence. So today, we're going to find those leaks, and we are going to plug them for good. So let's just get right to it. Why do most traders stay broke? It's not because they're missing some secret indicator or a magical strategy they haven't bought yet. Nope. The real answer is usually found in 5 fundamental and honestly often ignored flaws in how they approach the market. And by the time we're done here, you're going to know exactly what they are and, more importantly, how to fix them. All right, here's the game plan. We're going to start with a weird one, the problem of learning too much. Then we'll talk about what you're actually measuring your success by, the emotional traps that we all fall into, the psychological need to be right, and then we're going to tie it all together with the most important fix of all. Okay, leak number 1, the overlearning paradox. And yeah, you heard me right. This is the crazy idea that in trading, you can learn so much stuff that your results actually get worse. Let's unpack how that's even possible. So you've been studying, right? You've learned about supply and demand, but you also know trend lines and support and resistance. One guru's telling you to buy at support, but another one's telling you that support is just liquidity that's about to get wiped out. An ICT trader sees a perfect fair value gap to buy into, while at the exact same time, another trader sees an imbalance that has to be filled to the downside. What's the result of all this? Complete and total mental gridlock. You can't pull the trigger on anything because all your knowledge is at war with itself inside your head. So here's the bottom line, and it's a tough pill to swallow. As your knowledge of all these conflicting ideas goes up, your actual ability to make a decision and execute a trade goes down. You actually end up worse off than when you started because you have no clear, single, repeatable process to follow. So how do you fix this? Well, it's pretty simple, but it's definitely not easy. For right now, just stop learning new things. Seriously. Pick one logical approach that clicks with you and go all in on that. The goal isn't to know everything. It's to master one thing and turn it into a system you can repeat, day in and day out. It's time to eliminate all that mental chaos. Okay, let's talk about leak number 2. This is a big one. It's all about focusing on the wrong thing. This is what happens when your only goal is to make money today, instead of building a system that makes money over the next year and the year after that. What you should be laser focused on is this concept right here, positive expectation, or plus EV for short. It's a fancy term from probability, but all it really means is having a system where if you just keep taking the same setups over and over, you will mathematically come out on top. It's not about winning this one trade. It's about knowing your edge will play out over hundreds of trades. Now, this is where it gets really tricky. In the short term, let's say your first 50 or 70 trades, your results are pretty much random. This is something called variance. You can literally do everything wrong and get lucky with a few huge wins, or you can follow a perfect system and still lose money. And this is where traders get completely fooled. They think their bad habits are working because they got lucky once or twice. But look what happens when you zoom out. Over hundreds of trades, the picture becomes crystal clear. This is the power of positive expectation. Yeah, every single one of these traders had dips, they had drawdowns, they had losing streaks. But because they had a real edge, the overall trend is undeniably up and to the right. The long-term edge always beats short-term randomness. So the fix is simple to say, but hard to do. You have to stop obsessing over your daily P&L. Instead, obsess over your process. Ask yourself, did I follow my rules? Did I make the hard decision to hold this trade to my target even when I was sweating bullets? That's what builds a lasting edge, not yanking a trade for a tiny profit just because you got scared. And that actually leads us perfectly into leak number 3, dangerous emotional shortcuts. This is what happens when you get impatient and you try to force success, skipping over the essential and sometimes painful parts of learning how to trade. Look, the real journey to becoming a consistently profitable trader looks like this curve on the left. It's slow. It usually dips into the red while you're figuring things out. But then, if you stick with it, it can start to curve up exponentially. But who wants that, right? We all want the curve on the right, that immediate, explosive spike. The problem is, that path, the get-rich-quick path, almost always ends in a catastrophic crash back to zero. So what do these shortcuts actually look like? Well, it's buying a $100,000 prop firm challenge when you can't even grow a tiny demo account. It's trying to flip $100 into $1 million like some guy on social media. You're chasing a goal that your current skill set just can't back up. And in the process, you're not learning anything valuable, you're just cementing really bad habits. All right, on to leak number 4. And man, this is a big one. It's the obsession with being right. This is where your ego starts writing checks that your trading account just can't cash. Let's use a poker analogy because it's perfect here. If you have pocket tens, that's a great hand. You've got about an 80% chance to win against a random bad hand like 7 deuce. But does it win 100% of the time? Of course not. It can still lose. A good decision can still have a bad outcome. On the flip side, the guy playing the garbage 7 deuce hand can get lucky and win the pot. But that doesn't make it a good play. It was still a terrible decision that will lose him money in the long run. The investing legend Peter Lynch nailed it. He said if you're good at this, you're going to be right maybe 6 times out of 10. Let that sink in for a second. One of the best of all time says the best you can hope for is to be wrong 40% of the time. If you get mad every time you take a loss, you are fighting a battle you are guaranteed to lose because losing is just a normal, everyday part of a profitable system. And this chart right here just drives the point home. Look at this. You can literally have more losing trades than winning trades in a month and still be wildly profitable. How is that possible? It's simple. Your average win is significantly bigger than your average loss. It's not about your win rate. It's about your risk to reward ratio. That's the whole game. So the fix is a major mental shift. You have to learn to completely detach yourself from the dollar outcome of any single trade. The only thing, and I mean the only thing, you should ever judge is the quality of your decision. Did this trade fit my tested plus EV system? If the answer is yes, then it was a good trade. Period. Win, lose, or... And that brings us to our final and honestly, most important leak. This is the one that really ties everything else together. And it's the lack of a system that is truly, personally yours. Ultimately, this is what we're all shooting for. Not some random gut-feeling guesswork, but a repeatable, logical process. You have a specific way to analyze the market. You have a concrete definition of what an A-plus setup looks like. You have a checklist for your entry criteria, and you have the ability to execute on that without hesitation. It's an if-then process, not a, well, maybe I hope this works process. But here's the real kicker. You can't just go copy-paste someone else's system and expect it to work for you. Why? Well, maybe it requires you to trade the London session at 3 a.m. your time. But more importantly, what if you don't truly deeply understand why it works? Because if you don't get the why behind the rules, you will have absolutely zero conviction in the system. And without conviction, the first time you have a few losses, you'll start to second guess it, you'll exit early, you'll skip trades, and you will single-handedly destroy that system's positive expectancy. So at the end of the day, the ultimate fix, the master key that plugs all 5 of these leaks at once, is to develop one good system. A system that is built on your own deep understanding of why the market moves, and one that's specifically tailored to your schedule, your personality, and your goals. And that really leaves us with one final critical question you have to ask yourself, and be honest. Are you actually building a single coherent system? Or are you just collecting a bunch of disconnected, conflicting strategies? Because the answer to that question is probably going to determine your entire future as a trader.